A crypto company just accidentally printed $300 trillion, more than the entire global economy.
Welcome back, folks. Time to catch up with the market on SoSoValue Crypto Daily. All right, let's dive right into the numbers. It's been another red day across the board. The total crypto market cap took a 2.47% dip, landing at $3.85 trillion. Now, looking at the big players, Bitcoin slid 2.2%, with the data wire putting its price at $110,500. Ethereum also lost some ground, down 3.2% to settle around $3,980. It was a sea of red across most sectors, with losses hovering between 2 and 4%. Layer 2 projects felt the most pain, dropping a hefty 6.7%. The one bright spot? The AI sector, which actually managed to squeak out a modest 1% gain. You just can't keep a good robot down, can you? Now for our top story, and this is one I am genuinely excited about because it's all about building real, lasting bridges to traditional finance. I'm talking about tokenized stocks. We've got two huge developments. First up, a new platform called SoloTex, born from a team-up between Texture Capital and Sologenic, has announced its plan to offer regulated tokenized equities directly to U.S. retail investors. The keywords there are regulated and U.S. retail. They're waiting on the green lights from FINRA, and if they get it, the platform could launch later this year. This isn't some synthetic IOU. We're talking real equity ownership. That means dividends, voting rights, the whole package, all represented by a digital token. This is the kind of innovation that builds a foundation for the future. And that's not all. The Backpack Exchange is partnering with Superstate to bring native on-chain stock trading to their users. They're integrating Superstate's opening bell platform right into the exchange. Imagine seamlessly trading your favorite crypto and then, in the same place, investing in traditional stocks. This is what we mean when we talk about breaking down the silos between TradFi and crypto. It's happening, people, and it's all about making these markets more compliant and accessible for everyone. Okay, next up, we have a story that sounds like it's straight out of a movie. You ever accidentally add an extra zero to a bank transfer? Well, stablecoin issuer Paxos just did that, times about $1 trillion. In the early hours of the morning, a technical glitch caused Paxos to accidentally mint, get this, 300 trillion PYUSD tokens. To put that in perspective, that number is bigger than the entire global economy, crypto and traditional combined. It's an absolutely mind-boggling figure. But before you panic, here's the good part. Paxos' systems caught it, and the erroneous tokens were destroyed within minutes. They put out a statement clarifying that it was an internal glitch, not a security breach, and all user funds were safe. It's a wild story that really highlights the immense scale we're operating at and serves as a pretty stark reminder of why robust controls are non-negotiable in this space. Shifting gears to some on-chain sleuthing, On-Chain Lens spotted some massive movements. 5 brand new wallets, which are allegedly linked to the mining giant Bitmine, received a staggering 104,336 ETH. That's worth about $416 million. The funds came from institutional custodian BitGo and the Kraken exchange. At the same time, we're seeing the share price of companies like MicroStrategy, which hold huge amounts of Bitcoin, coming under pressure. What this signals is a shift in the market's thinking. The days of a company getting a huge stock premium just for holding crypto might be fading. The market is getting smarter. Now it's going to be more about governance and how these companies actively manage their digital asset treasuries. All eyes will be on how Bitmine handles this situation. It could really define its reputation moving forward. In other news, prediction market platform Polymarket is expanding its turf. They're famous for letting you bet on everything from elections to crypto prices, and now they're launching up and down contracts for stocks and indices. Basically, you'll be able to speculate on whether Apple stock or the S&P 500 will go up or down over a certain time. It's a simple, low-barrier way for crypto-native users to get exposure to traditional markets without needing a full-blown brokerage account. It's another cool example of crypto platforms branching out and trying to pull in more mainstream users and liquidity. And finally, a couple of quick but important updates from Coinbase. First, the exchange unveiled a new blue carpet program. Think of it as a VIP service for asset issuers looking to list on the exchange. It consolidates a bunch of services into one free package to make the listing process smoother and more transparent. Secondly, half an hour later, Coinbase announced it has officially added BNB to its asset listing roadmap. This is a big deal given the competitive history there. It definitely makes you wonder what the strategy is here. Combining yesterday's big splash made from CJ's post of Binance's listing offering, the drama seems been planned and more scene is waiting at the backstage. Got your drinks and popcorn prepared and wait for show. That's a wrap for today's update. Catch you tomorrow, same time, same place. Cut through the chaos. Focus on what drives the crypto market. Stay on top of crypto research, all in one place at SoSoValue.com.